I've
All
got the
right.
thumbs up.
All right. Hey, everybody. Thanks for joining today. It's been a great conference so far. I was able to watch most of the presentations of the panelists. So they, of course, they saved the best for last. The topic today, which I'm going to be moderating, is the future of financial institutions in digital asset space. Just a real quick background on myself. I'm Chief Operating Officer of Secure Digital Markets, which is one of Canada's leading digital asset brokerage houses. I'm excited to be here. And, first thing I would like to do is thank the panelists in advance for joining me today. We have Sourabh Kumar, who's the CEO of the World Crypto Council, Jessica Walker, who's the CMO of FluidFi, and Nicolas, who's a senior trader at SDM, and he's also the founder of RainFX. So I would like to start, I guess, by having each panelist, introduce yourself, provide a brief background, kind of where you're working now and your current role. So Jessica, maybe let's start with you.
Amazing. I always like to be on the blockchain panels because the ladies first always means like I get the first introduction. Guys, great to be speaking with you all here. So my name is Jessica Walker. I actually started my career in marketing for traditional finance for a Forex bank and slowly moved into crypto in 2017. And I've been media specialist for Bitpanda Exchange, which is based out of Europe in Vienna. And I was part of their team that led from cryptocurrency investing and exchanging through into their fractionalized stock investing, and then more recently with CoinMarketCap as a media specialist for them and part of their YouTube channel with educational content, and most recently FluidFi, which is a bank alternative based out of Geneva in Switzerland, integrating the benefits of a traditional neobank with Web3 integration in our web application and built on the Arbitrum network. So I'll share a little bit more about the things that we have coming up, but it's great to be joined by you guys.
Right, great. Thanks, Jessica. Sourabh?
Yeah, hi. Okay, so I'm Sourabh, and I'm based out of India, and I represent World Crypto Council. So we have been working with United Nations and World Bank Group for last 1.5 years. We are kind of a lead consultant for them when it comes to blockchain, digital assets, and understanding how it works all together. And we have worked with like more than 20 odd countries so far. And since April this year, we started working with corporate clients. And one of the big names that we have is Polygon, whom we work with government and Polygon for a lot of projects in India.
All right, great. Thanks for joining us today. And Nicolas?
Hey guys, so I'm a traditional trader at heart. Started my prop trading journey back in Montreal, trading many traditional assets, going from bonds, commodities, equities, to end up, moving into the crypto world where I had a lot of fun, really fun roller coaster, and was able to bring my traditional knowledge into the crypto world, and was also able to build some significant strategies and build a fun and enjoy my time in this turbulent market. But yeah, that's basically what I do.
All right, great. Thanks as well for joining us. All right, so let's just kind of get into it here. So I think the topic of the future of financial institutions in digital asset space, I think it's very timely. Especially with the announcement yesterday of the partnership between Coinbase and BlackRock. And for those who don't know the scale of BlackRock, I mean they do manage $10 trillion in investments. So for a company of this magnitude to I'll say jump into this space. I think it's a significant event in crypto history, I guess. So given this backdrop, I wanted to start by asking the panelists, if you fast forward, 5 to 7 years down the road, what is the future of financial institutions in digital asset space? Will there continue to be a separation of TradFi institutions from crypto native firms? Does the market merge together? So I'd like to kind of go around and ask everybody. And Jessica, you are the lucky one. You get to go first.
Thank you. And Alan, I have to agree with you there. I think the BlackRock news was huge news for the crypto markets, but also for those that are in TradFi as well, because Deloitte Bank released a study for 2030 and how the landscape of banking would look. And one of the core pillars they said is putting their customers' needs first and really attending to the needs of the client. And I think seeing client demand for crypto hunger, especially despite the market conditions that we're seeing currently, just really shows the sheer size of appetite for digital markets and especially cryptocurrency accessibility right now. And I really am expecting to see a merger. I know for Fluid Finance, that's definitely one thing that we have been developing with our technology for around 18 months, actually, is the ability to work with local banking partners in local jurisdictions, but then also have an integration built on currently Arbitrum network. So you can actually have a digital representation of your own currency, and then you can move into Web3, because there is so many blockers right now when you look at the traditional banking system for consumers around the world. And I think cross-border payments is still an issue in 2022, which we really shouldn't be seeing. It's a huge blocker for smaller international businesses, SMEs. There's high fees when it comes to different transactions, and even getting in and out of crypto when it comes to cryptocurrency exchanges. We've got the leading dominators in this space like Binance. We've also got kind of the Geminis that charge fairly large fees on Coinbase as well. And it does hinder new investments. There's also jurisdiction regulations as well. So it is about time that we do see a merger between these two worlds. And I think local banks are warming up to the likes of cryptocurrencies. We're seeing Visa has kind of a cryptocurrency expert on field now as well. Integrations are coming, and I think it is something that we can expect to see in the next 5 years, a lot more digital representation, with the neobanks potentially offering a lot more than just purchasing kind of the centralized wallets on the exchange. I think we are going to see an integration of a wider cryptocurrency landscape. So it's a really exciting time to be in the space.
Right. No, definitely. And do you think the the TradFi firms get into the space directly, or do you think it still remains like a separate crypto native, for the most part, crypto native companies like your own, and you still have the call it the big mega banks out there?
To me?
Yeah, sure.
Okay, cool. I think we are starting to, well, I know personally from some of the banking partners that we're working with, we are starting to see an appetite for them being more crypto curious, but there is still so much concern and also caution with larger banks around the space of cryptocurrencies and how they can move forward with integration. I think in the next 5 years, it is going to be kind of under sister companies and moving forward at a smaller scale, just because there is still risk when it comes to this space. You don't want to be that large banking partner that does put a foot in the wrong direction. However, I do think right now it is, if you kind of are late to the game, then you're going to be out, because in the next 10 years, competition is going to be high for these different processes and offerings for new clients. And especially with younger audiences as well, people typically don't test around for new investment banks every so often. So as we are seeing a risk appetite for 18 to 22-year-olds significantly increase in the last 3 years, I do think we're going to have to see banks really step up to the plate to make sure they don't miss out on this new acquisition.
Right. Yes, that definitely makes sense. Sourabh, how about you? Given the same question, if you fast forward 5 to 7 years down the road, what do you think the makeup of financial institutions looks like in digital asset space?
Well, I would mostly agree with what Jessica just told. I do see, giving a one-line answer, it would be, yeah, I do see a merger of, the crypto native companies and the traditional banking institutions that we see right now. But there is one thing, like Jessica already mentioned this, that, banks, the larger banks are very cautious when they're trying to enter the space. And from my perspective and from the people whom we have been in connection with, for the last few years, what we see is that a lot of people in the traditional financial system, they don't understand the whole digital assets industry altogether. There is a huge misconception that they have. That's one. And there is also misinformation is what is, brought in front of them. Because I have personally seen reports, okay, in few bodies of United Nations, and those have been highly misinterpreted and, misrepresented. And that's how the policymakers are not able to, justify that, yes, there is a need of, cryptocurrencies or maybe digital assets coming to the picture. And but 5 years down the line, there are a lot of good research reports coming up every week now, I suppose. and almost all the big organizations are into digital assets altogether. So going 5 7 years down the line, I do see that a lot of support would be there from the ecosystem, and that's how the merger would be very easy, and it would be streamlined as you know like streamlined, yeah.
Right. Okay. All right. Great. Thank you for that. And Nicolas, how about you? How do you envision
Yeah.
the future of financial institutions?
I mean, I guess just first of all, to follow up on what Sourabh just said. With the disinformation, and different institution having different skill sets, different knowledge. I think that in the next couple of years, mergers are going to be significant and needed in some sorts. Again, what we saw with BlackRock and Coinbase is literally like we've been waiting for this type of news for the past year. I'd say it's been like a really really hot topic that everyone was waiting for. Unfortunately, right now it's happening in a moment of the market, in the bear market. But again, it's a very 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 important news. This is going to strain this whole structure of the traditional finance versus native crypto firm. But I think down the road that it is we're going to see a lot more mergers like this. This is basically the foundation of this structure, and I think it's going to be needed moving forward.
All right, great, thanks. And just to kind of, I guess, add to the previous question, do we envision a call it the universal one-stop shop providers down the road, where firms do everything, from investment management, custody, trading, lending, staking, or yeah.
Yeah, well, personally, when you look at what's just first, it's really easy now because we have the perfect example with BlackRock and Coinbase, right? Like, they together they're able to offer a lot more, right? They're able to offer crypto trading, custody, prime brokerage. They're going to be able to report many capabilities. Share clients. So I think that down the road, the big groups, the big players are going to be able to offer and diversify their offering to their audience, right? And I think that's being able to do so. They're going to be able to attract more clients and get the bigger share of the pie.
Okay. How about you, Jessica? Do you think the specialists, if you will, could survive or will survive, or do you think everybody needs to be the one-stop shop?
I do think as the market gets more competitive, the landscape for financial offerings will really kind of evolve and kind of grow on from what we saw with the neobanks kind of 5 years ago rising to appearance. I'm based here in Europe originally, and it's like Revolut, for example, was a real shaker up in the industry when it comes to free global transactions you could spend, and FX rates were also very low and very competitive. And that really gave consumers a new appetite for what to expect. I think that is continuing to increase. And a really great example of that was the GameStop saga of January 2021 last year, where we saw retail investors kind of surge to the markets and kind of take on the Wall Street when it comes to investing. And that was a really huge turning point when it comes to stock appetite for retail investors. And the share price was up 1,700%. It was really insane to watch, and also to work for a fractionalized stock exchange at the time and just see this surge in user signups and user flow as well. And I think even the organization that I was working for wasn't expecting the traffic to come in this surge. And when we look, Credit Suisse has actually estimated a third of all stock market trading in the US in 2021 is made up of retail investors. So I think for institutions, it might act a little bit differently, but I think for the retail investors, from these neobank evolutions, I do think you're going to have to see kind of the leverage options as well. You're going to have to see these kind of more diverse range of offerings for people to just kind of get them on board, because it is possible from a smaller magnitude. From the larger institutional side, I think that's probably something, Alan, you're better to answer with than myself.
All right, great. Thanks, Jessica. Sourabh, how about you? What are your thoughts about the specialist firms versus the one-stop shop down the road?
From my perspective, what I feel is that specialist firms would be the ones who will be able to survive. And as Nicolas mentioned, the most effective way to gather more market is partnering with other companies who are, specialists in what they do. So it's like, everyone playing with everyone else's strong points would be the way forward, because we have seen a lot of companies, pivoting into a lot of things. And even if one of those fail, it's a huge impact on the trust and the whole market share of that particular organization. So one-stop shop is something that we the digital assets as an industry, from my personal perspective, is yet not ready to take on to.
Right. Yeah, I mean, I think about like in TradFi space, it's you have both, right? You have like the universal one-stop shop, call it mega banks, if you will, and then you also have some specialists, whether it's brokerage firms, asset management firms, etc. So I think there's basically room to survive for everybody, grow, prosper, depending on the clients, the target, the needs, etc. So yeah, my thought is there'll be needs for both, and there will be both. If you fast forward 5 years down the road. Okay. The next thing I want to talk about, and kind of adding on to this a little bit, but what do you think will be one of the biggest disruptors to the financial institutions, over say the next 10 years? And then what are you each individually like most excited about based off of this? Why don't we start with Jessica this time?
Sure, sounds good. So from my side, actually, when we're looking at offerings, I think on-ramp and off-ramp from both traditional world into the cryptocurrency space and the digital asset space, this is going to be a huge game changer for how retail investors are able to operate and navigate their money. Sorry, it's a little bit late there. Here I'm past my bedtime, so it's... I'll actually let someone else go while I grab a drink, and then I'll come back to this one.
Sure. Nicolas, do you want to take this one? When they say
Yeah,
biggest disruptors
sure.
to the financial institutions, and what are you personally most excited about?
I mean, first, just to continue a little bit in terms of like what Jessica was saying in terms of like on-ramp, off-ramp, which is like something that's going to be extremely needed in the next couple of years as more institutions are adopting cryptocurrencies, right? Secure digital market, the company where your CEO at, is a prime example of this, where, a lot more demand is going to come into play, especially with more regulation coming in the next couple of years, giving more security to the average investor, to institutions, to, valued institution that wants to come into play. I think that regulation is going to be a big one. I think it's going to really bring on board a lot more share of, the financial market as much as crypto as traditional. And I think this is going to be one of the biggest and most important aspect to bring on board a lot of more players into the game.
Right. Yep, I think that's a good point. Jessica, you okay now? You have some water?
I'm back. I'm fully recovered. I'm actually based out of Dubai, so summers here are like 50 degrees, so it's constantly AC on, so it gets a little croaky. So thanks for bearing with me.
And the sand blowing all over the place too, right?
Exactly. So I think what we have seen over the past 5 years is we've seen a surge of wealth when it comes to the cryptocurrencies and the digital asset space. And there has been this kind of centralized, like two versions of a train tracks where it's completely parallel. Industries are growing, but they're not able to connect with each other. And I think it's kind of an extension on cross-border payments being an issue in the industry. It's kind of cross-industry payments. So people that have managed to garner wealth when it comes to Web3, these metaverse realms, where we are seeing it being a multi-trillion-dollar industry, and then the traditional asset world. And this kind of divergence between the two, it's really difficult for retail users, but also larger institutions to actually navigate this streamline of actually having money off-ramped into the traditional world. And I think it's definitely jeopardized both industries. I think if the cryptocurrency space was more accessible to a lot of retail investors, we would have seen a more consistent appetite flow. Whereas you do see, because it is more difficult to get into the space, especially considering different regions, you do see these waves of attraction. And then also off-ramping is just a whole other nightmare in itself that people that have been in the cryptocurrency space for a few years don't really talk about enough, just the sheer difficulty of off-ramping your cryptocurrencies into the real world. And I'm going to be honest, I'm based here in Dubai, and typically in Dubai, you'll have an OTC person that will come and meet you with an envelope full of cash. That is just one of the streamlined ways, which is the fastest way to navigate out of crypto. And I was telling some of the cryptocurrency influencers that I know here that Fluid Finance is actually offering an alternative to this. And they were saying, wait, so where do I meet the guy? And I was saying, no, you guys aren't getting it. You can actually off-ramp into a traditional bank account, which is accepted anywhere that MasterCard is accepted. We had one community member that was able to off-ramp Ethereum and buy an apartment in Greece. And just that neutralization of wealth change, being able to move your cryptocurrency funds into the real world, it will equalize a lot of playing fields as well, because there are areas which Africa, for example, has a huge cryptocurrency appetite, but actually being able to off-ramp that into the traditional space is a huge issue and a huge pain point for a majority of countries across Africa. So it will definitely shift the financial world as we know it for retail investors in a very exciting way. It's just who will get there first, what will be the most competitive rates, and what kind of regions will they be able to access while abiding to regulations as well.
Right. Yes, my thought is, I think eventually when we get to the point where you don't need to off ramp your digital assets and go to a bank and take the money, right? I think of almost like a Venmo. Okay, I could transfer money to Nicolas. He can give it to Sourabh. He give it to Jessica, and it could stay within that ecosystem. So you almost have potentially a separate ecosystem down the road. Would be ideal, because even in the U.S. where I am, it is difficult to off ramp. It takes multiple days. You have to get the money, and it is a headache. It's not easy. Sourabh, though, let's get to you though. Same question though. What do you think will be the biggest disruptors over the next 10 years, and what are you personally most excited about?
Okay. Hello. Okay. Yeah. So Alan, the two things. What Jessica mentioned. The biggest problem is taking the money out of what is there in crypto. Okay, I'll talk about countries like she mentioned Africa, but if you look at India, India has one of the highest number of users. Okay, and there are two problems. One is how you buy an Ethereum or Bitcoin. That's problem number one, because you have real cash. Okay, and Indian banks do not allow that to be transferred to a crypto exchange. So that's one. So what happens is, just like Jessica mentioned, there is an OTC guy who comes in and who gives you USDT. But there is an issue. The exchange rate is much higher than what you'll get in the market. So you pay at least a 5 to 10% premium of getting USDTs. Then when you need to get your money back, again you face the same issue. So it's like 10 to 15% money is lost just in transactions, and it's like a gray market. It's like non-taxable, and it's illegal. And that's the reason, if I'm not sure if you guys are following the news today, but there has been an issue with one of the largest exchanges in India, WazirX, which claimed to be, a part of Binance team. And CZ just came out and, tweeted a few hours back that Binance doesn't own WazirX. So it's a big thing. It's a very huge question of credibility, because a year back, CZ was praising WazirX as a Binance owned company on the way to make $1 billion in 2021. And that's recorded on a tweet. So there are two things. One is, accountability, and second one is following the regulations. Because entering a market, making the money out of there, it's absolutely fine. But you need to follow the regulations, and also there should be accountability on all parts. Because till 2022 January, as everyone knows, Binance had 0 licenses. 6 months down the line, they have 5. The only reason the biggest exchange, the largest by, it's like 2 times the rank 2, at least. Right. Okay. So, the only reason they are doing this is because they understand the value of being regulated and, having, like going hand in hand with the governments, because it's just how you can foresee the future, that, you have to work hand in hand with them so that you move ahead. And that's like two things for me.
100%.
Yeah. So just two things, two keywords.
Gotcha.
Is like,
I would say
Sure. Yeah, it's like accountability and following the regulations. These are the key things that will be interesting to see in the next few years.
Right. That makes sense. Yeah, I know we had a panel on the regulation earlier today, and yeah, I couldn't agree more. I mean, the reality is like, without regulation, the market's never going to evolve. So, it is good to see the regulation. I think in the short run, a lot of market participants are, I'll say, taken back by it, but in the long run, it's going to help the market develop, especially on the institutional side, and it's going to help protect retail as well. Yeah. So let's change topics just a little bit. We talked a little bit about, the movement of assets, et cetera, but, let's talk about trading crypto assets. I'm curious how you see the market evolving over time, both from a retail point of view as well as institutional. But, I don't know, maybe we'll start with like the current form and then provide your thoughts on what do you think it'll look like down the road, what it'll change to. Nicolas, I know obviously you trade for a living, both FX as well as digital assets. So let's start with you on this one.
Absolutely. I think that in the past 2 years, even like the last year, it's been extremely interesting to see the shift in the way these assets are being traded, right? I think that it is a very positive thing that you see, a lot more adoption and acceptance of cryptocurrency across, industries. And you saw from, the COVID crisis all the way to now where, the market and the economy is being stronger and stronger by the day. I think that you saw a massive shift in how traders and investors were playing cryptocurrencies. I think Bitcoin, we saw the massive correlation coming to play with traditional assets like, the main equities, NASDAQ of this world. And, doing so, there's a total different way of investing and trading this asset, right? Now you need to analyze Bitcoin just like you analyze NASDAQ, just like you analyze the S&P 500, which is for a traditional trader extremely positive. It's extremely good thing, right? Because you can assess the exact same strategy that you do on traditional asset as to Bitcoin. And the thing is that a lot of people had a lot of success, investing into cryptocurrencies, only knowing cryptocurrencies, right? And this is where you have a massive hedge and a massive advantage, having that fundamental and macroeconomic knowledge of the traditional market, moving into the cryptocurrency market. So, as the desk, me personally, when we invest, it now starts with, as crazy as it sounds, talking about crypto and Bitcoin. The first assessment into investing and trading is, look, what's the fundamental, background of the situation that's happening right now? What's the macroeconomic picture that we see right now? And from there, now you go into, looking at different projects, looking at some technicals, and from there, you assess and you trade, which I'd say 3 years, 4 years, 5 years from now, you would have said, look, I'm going to listen to a Fed speaker and trade from it, trade Bitcoin. You'd be like, no, that doesn't make sense. That doesn't suit, the purpose. But now it's literally, me personally and, and the desk, it's, you look exactly, you look at Bitcoin exactly like you look at any other risk assets, which is why, you see big institution coming to play, taking massive positions and moving the market, significantly. Doing so, you have a lot more smart money coming into the game. And from there, the retailers are getting shaken out a lot. Again, looking at the market currently, you see a big downturn on the back of, fundamental reason and, the monetary policy, the Fed hiking rates for a different reason, inflation's coming into play. A big topic is Bitcoin an edge against inflation? As we can see, it definitely is not. But then, from there, you really need to invest on the long run, looking at the big macro picture. And I think that, smart money understood that. Smart money are moving funds into, the cryptocurrency market because they see the next big opportunity, right? And now they're comfortable and they know the strategy to do so. Before it was, an unknown territory for these big firms, right? But now, as a lot more concrete money is into play, now they can take position, more securely and with more assertion. So I think that this is how it's going to be traded now. I think people in big institutions are going to diversify into cryptocurrencies, offering, different yields. Obviously, because there's different volatility coming into play when you trade these assets. But I think that with all the smart money coming in, you're going to see a big shift and into the next bull run, a lot of power, moving to new all-time highs.
Right. Yeah. No, I think that makes sense. And what what percentage? I know in TradFi markets, the algo and the high frequency traders take up a big percentage, right? Especially FX, products that you trade, even in U.S. Treasuries. What percentage do you think now is in digital asset space coming from the algo or high frequency traders, providing liquidity, and then how do you think that's going to evolve over time?
I mean, like as we know, like as traders, there's the algo portion of investing and trading is massive, right? Big institution are really heavy into this, and as a trader, day trading or swing trading, you can see these move and these shifts, very clearly on a chart. And now talking about the algos, you can literally trade Nasdaq and Bitcoin in tandem, as they were at some point. I'd say like 3 months ago, we were trading on like a 90% correlation at some point. And what happens that big institution have some algo strategy on their risk assets, which at first it was Nasdaq or it was the S&P, the Russell 2000, the Dow Jones 30. So now they assess the same strategy for these indices into Bitcoin, right? So that's why you see every time you see a big macroeconomic data being released, you see a big, let's say, spike down or spike up from these algos on these risk assets, and you see the exact same movement on Bitcoin, right? This is not just big institutional trader pushing a button, buy or sell. It's straight up algos,
Right.
doing the same play as for the traditional assets. So.
Okay. All right. Thanks for that. Switch topics a little bit. We touched upon this before, but this is obviously a global conference. I want to talk about the hurdles that say currently impact the masses in developing and underdeveloped countries in regards to financial inclusion. Why is access to financial institutions still a privilege in many parts of the world, and how do we overcome these hurdles? For me, like sitting in the U.S., I always get people asking me, well, why do we need Bitcoin? Why do we need digital assets? Why do we need cryptocurrencies? And I don't think they understand, some of the issues with the rest of the world. So I'd like to kind of like just talk about this topic briefly. Sourabh, let's start with you.
Sure. So, Alan, this is a huge, yeah, as you mentioned, right? Sitting in US or sitting in, UK or Europe, a lot of people might not be able to understand why cryptocurrencies are needed. Like, I'll give you a very small, very basic example. Okay, we do a lot of agricultural food trading. Okay, so we have some organizations in India, and from India we supply rice to a country in Africa, that's Ghana. Okay, and if you can just check, Ghana is on almost every blacklist kind of thing. Okay, so you cannot use a Visa card, you cannot, like you cannot open an account on TransferWise or Revolut or anywhere if you're from Ghana. The second problem is that any bank from Ghana, okay, will not be able to issue a letter of credit to a bank in India or UK. Okay, so what they do, they have banking partners in France. Okay, because France used to rule them long time back. Okay, and then these banks charge them a 22% premium. We're talking about 2 that's 22% premium on every letter of credit that they transfer to India. So, my rice, which is like half a dollar, okay, adding transportation and this 22% becomes almost like, $1 before it lands in Ghana.
Right.
Okay. And the per person, earning capacity is much lower already. And over there, you have inflated prices because of, the banking hassles. So this is one country where like cryptocurrencies are very much needed, and in collaboration with a few Emirati companies, we did a transaction for sugar and rice very recently in May. Okay, using cryptocurrencies, and they were able to save 17.5%. So this is just one example, one commodity, one country. Talk about this, go to, like India, Pakistan, Sri Lanka. You might have heard about the financial issues in Sri Lanka, right? So Sri Lanka, Sri Lankan rupee, okay, Sri Lankan currency to a dollar was 280. And by the time the banks opened the next day, it's like 390. So it's like 30% dip within, 12 hours. And a lot of businesses lost a lot of money. So that's where any form of digital asset comes into picture, and that's where it can actually save a lot of countries or communities. And as Jessica was mentioning sometime earlier, about cross-border payments. Cross-border payments, forget about being costly. It is time-consuming. A lot of transfers of money from Africa to India or India to there, or maybe any other developing or underdeveloped country, takes 4 to 5 business days. It's your money. Okay, it is not in like Alan sends me money from Africa. It's not in Alan's account. It's not in Saurav's account, and it's in no one's account. Okay, so either Swift is earning out of it, or the intermediary bank Citibank is earning out of it. No one knows about it. And when you calculate it globally, you'll find that there are more than like 700 720 or 730 billion dollars every day, which is nowhere in the world. This is what the volume of transactions lost is. Like, and okay, I used to live in Europe for like 7 8 years. I didn't realize this because I just transfer the money and Alan receives it within minutes. So, okay, my money is there. But coming back here, okay, now it's pretty difficult.
So let me ask you a question, right? Because in some of the developing countries, and I do not know the answer, and you might, but what percent of the population actually has access to the technology needed, right, to use digital assets, right? And I think that's the question that I think if the answer is a very high percentage, then great. If the answer is still low, I'm not so sure this is a current solution to the problem.
Okay, Alan, there are two things. Okay, a lot of people, like more than 2 billion people in the world are underbanked. Okay, they don't have a bank account. Okay, Africa and the Asian continent being the highest percentage of that. Now, answering your question, there is a company in Kenya, okay, where you can buy Bitcoin using a normal old version of Nokia phone that doesn't even require internet connection. So when we are talking about penetration of mobile phones, if someone has a mobile phone, there is a solution already there. It just needs to be scaled at that particular level. That's all.
Right. Okay. All right. Great. All right. I know we're almost out of time, so I just want to I do want to finish it on one question, which I tend to ask as a moderator, and I'd like to get everybody's thoughts, and not to put people on the spot, and not that say Bitcoin is the be all that end all, but I would like to know, like, fast forward to 12 months from now, where do you think the price of Bitcoin is? And you can't say you can't say I'm not sure. So everybody has an opinion. So Sourabh, let's go with you first.
Okay, so 12 months from now, so that's like August 23, 45 to 50,000 range.
Okay. Jessica?
Yeah, I would actually have a similar vote. I would say around 40 to 50,000 US dollars. I typically, though, I'm always off with this. I'm not a trader, so I'm going to pass it off to Nicolas. So normally it goes in the complete other direction,
right.
which is why
That's
I was tempted to lowball it.
Pull out your pens and pencils, because I think Nicolas is going to have the right answer.
Here you go. So I'm going to give just a 1 minute analysis on why it would be a price. But we have the halving in summer 2024, which in 2 years from now, and then you look at summer 2023, which would be 1 year from now. We're going to see a decrease, I think, in the interest rates. In mid 2023. So once you start easing the rates, you're going to see a lot more upside on risk assets. So I think that into the summer 2023 and into the halving in 2024, we're going to see a nice little bull run from there, and the market pick up from there. So it's going to be the start, I think, of the next bull run in terms of certain risk assets. So I would say around, you guys are I kind of like the numbers you guys are throwing there. I'm not gonna lie, you guys are pretty good. I'm impressed. I like it. But I'm gonna say just because you guys said flat numbers, we're gonna be around 55 and 60, I think, and then we're gonna move up from there.
All right, great. So like Sourabh, Jess, you could all become traders, right? Just
there you go.
You all have the right prediction.
Definitely.
Yeah, exactly. But yes, I want to thank the panelists again. Jessica, Sourabh, Nicolas, thank you so much for joining me here. I'd like to thank the audience for joining as well, the Global Family Office Summit. I think it's been a great day. And yeah, so we'll wrap it up here. And everybody have a great weekend. Enjoy either the rest of your day or rest of your night, depending where you are. And thank you so much.
Thank you, Alan,
Yeah,
for moderating. It was beautiful. Thank you.
Thanks,
Thanks,
Thanks, guys.
Nicolas.